think overall the trend is going to continue down, more so not because of anything to do with Bitcoin. And I think for Bitcoin maxis, this is the hardest thing to understand. That means that if I'm right and the stock market has 20% downside from here in the next 6 to 12 months, and that's to me where it could come down. The next level's at 25, then we have major support at 20, and then ultimately back to 15.7.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Just your general take on what's going on in the U.S. economy. Can you tell me what is going on there?
Yeah, absolutely. So I think there's this divergence between what we're being told in terms of some of the stats and what really the underlying economy is showing us from like the perspective of a retail investor or just someone in the population. And what I mean by that is that you have data that is starting to show weakness, but the jobs numbers are still strong, but people are getting hurt because of inflation, because of other factors. And so you're still seeing this kind of chase for return in the stock market, but for the most part, people are now beginning, at least according to me, they're starting to be seen as kind of troubled. Like they're starting to experience the pain of running out of savings from COVID. And you mentioned the NASDAQ's outperformance, and I think a great stat here is that if you look at what the NASDAQ 100 is up, I think 36% year to date. If you take out the top 5 stocks, you know, the Amazons, the Nvidias, the Microsofts, the Apples, and so forth, the NASDAQ would only be up about 13% on the year. So it's very much concentrated, contrary to what a lot of people will tell you. And that is, to me, a warning sign for the overall market as well, that it's so concentrated in a couple names.
I think connected to this, we do have all these calls for a soft landing getting louder and louder. Although, of course, I speak to many people who don't think that's the case. In your view, is there any possibility that that could happen?
I mean, there's always a tiny possibility, but I would rank it as a very slim one. The key here is, and this is really interesting, is if you go back to 2000 before the dot-com bubble burst, and once it started to burst, we saw the exact same thing. Everyone started calling for a soft landing. Everything was going to be okay. The same thing occurred in 2007, just before the financial recession. And so this is a very common thing where initially people expect something dramatic. You know, everyone's hearing, you know, we saw the inversion of the yield curve and everyone immediately thought recession. But interestingly enough, with the inversion of the yield curve, the recession doesn't occur until the uninversion. All right, but people expect it as soon as they hear the headlines of, oh, we have an inverted yield curve. And so past recessions have proven this. And again, we're in that same situation where initially at the start of 2023, everyone was saying, wow, you know, this is going to be a horrible first half. It turned out to be a great first half. Now no one is thinking it's going to be horrible. And that's usually when the bad stuff comes. So I do think the second half is going to be rough into 2024. And I think, remember, the Fed has hiked rates so much. This is the most aggressive hiking they have ever done in the history of the Federal Reserve. And there's a lag effect. There's a 6 to 12 month lag. And so you can't say that what we're experiencing right now is exactly where interest rates are. You have to give it about 6 to 12 months from now. And then you can say, okay, this is the economy under 5.25% to 5.5% Fed funds rate.
To what extent should we be worried about what's happening in China?
Yeah, it's an interesting situation in China because, you know, they didn't get the same bounce from when the lockdowns kind of, you know, ended there versus what the U.S. saw. The U.S. saw this massive spending spree after all this money had been saved. In China, we didn't see that. And I think the key here is that their economy has been kind of teetering for a long time, and they've been plugging holes. Their real estate situation has been really bad for really the last 10 years, with whole cities in China being built up with no one living in them. So I think there's the bigger issues there of how they're going to get through this. I would say this is that China can potentially be harmful to the global economy, but I also think that the global economy has been diversifying their supply chains, their imports away from China because of the risk of Taiwan and what's going on there. So I do think China plays a big role. They're the second biggest economy in the world, but I also think that it's not as big a role as it was maybe 2 or 3 years ago in its impact on the global economy.
So these are really big issues we're going over at the country level in terms of the US and China. I do like to always relate these things back to what can individual investors or traders do. So do you see tradable opportunities in these circumstances?
Yeah, I always do, right? So for instance, for me, when I see China in tough situations, it likely means that there'll be more money printing to kind of maintain control, to get the population to be happy and to be okay with the government. And so I think, for instance, a small position, something like KWEB, which is the China ETF, is semi-interesting at this point, based on where things currently are. Again, I'm all about buying the fear and then selling into the greed. And I think as a trader, that serves you very, very well if you look historically at the tops and bottoms of markets, stocks, and so forth. So I think that's an interesting side of things. I also think that there's some intrigue in the gold chart, right? So, in fact, let me bring up my charts here so we can take a look. Gold's having a big move today. And the key with gold, and here I'm just bringing up the chart now, but when we look at the gold chart here, there we go, we can see that gold is actually in this bullish consolidation wedge pattern here and actually having a pretty powerful move up. And so what I like about gold is we've seen such a strong dollar move to the upside, yet gold is still performing relatively well. And to me, that's telling me there's liquidity moving into gold as a protective asset. So I'm expecting us to start a bigger move up here that eventually takes out this triple top up here around this 2075 level. And I think that's a great, interesting area to play, potentially gold miners. Gold miners have been hit very, very hard here as well. They're getting a big bounce today, but you can see they're quite a bit off of their highs here of just really 6 months ago or so. So there are opportunities out there. I think people just have to be very choosy. And this is a market where you can't close your eyes and throw a dart at a dartboard and expect to make money like in 2021 or earlier this year. You have to be a little bit more, kind of a stock picker at this point. So I think, again, at least, gold certainly hasn't been flashy this year. Last year was a much better performer in terms of its upside, outperforming the stock market and Bitcoin. In this situation, it's been more quiet, right? You haven't really seen a lot of price action. If you go to the beginning of 2023, I think we're slightly positive on the year on gold, but it's not been the amount of upside that we've seen in Bitcoin or in the stock market. But I will say this, in terms of risk versus reward, I think it's still a top play here for an investor. So you want to be in something where you're not going to see 20%, 30% drawdown versus, maybe you're not going to get 50% upside in a year either, but you can still see 20% on gold to the upside. And so I do anticipate by year end, there's this triple top here. Interesting little tidbit on education is that double tops get your big pullback. So here was your high, here was your double top, that was your big pullback. Historically, here's your triple top, you get small pullbacks and then breakouts. And so again, that's kind of the game plan that we're following at this point, where I expect it to start to move up and eventually take out the highs. And I think, again, if you look at the fear of what could happen globally, de-dollarization, the fears of everything else in the economy going, gold becomes a pure play for safety, which can propel it much, much higher.
What are your updated thoughts on where Bitcoin is headed?
Yeah, and what we can see here is that on the Bitcoin chart here, we tested that area right here, same area right over here, and eventually it failed and came back in. And then we had this upsloping trend line here, which again, it's a trend line, meaning trend. And if you just connect all of these lows, that gave you that trend line. We've broken that. So we are getting a little bounce today along with gold. So that's interesting to see. But unless we recapture this area and then take out this 31,000 area, to be honest, I would remain very careful on Bitcoin. I think overall, the trend is going to continue down, more so not because of anything to do with Bitcoin. And I think for Bitcoin maxis, this is the hardest thing to understand, is that Bitcoin to me is a genius thing. It makes so much sense in every which way, but it still conforms to the laws of risk assets until it becomes a non-risk asset. And that means that if I'm right and the stock market has 20% downside from here in the next 6 to 12 months, it's going to be hard for Bitcoin to withstand that sell pressure in the overall markets. And that's, to me, where it could come down. The next level's at 25, then we have major support at 20, and then ultimately back to 15.7. So I'm still in the camp that until we see the stock market really flush out, Bitcoin will remain vulnerable until that point, or until the Fed starts printing aggressively again.
And how do we get that reclassification of Bitcoin that you're just mentioning?
I think it's something that happens over time, right? So we've seen little. So if you go back 5 years, it was a risk asset. There was nothing else about it, right? It was every uptick and downtick was with the stock market. Much more recently, we've seen a divergence in that. For instance, at this low, this is where the bank failures occurred, right? So we saw Bitcoin actually ripping higher when US banks began to fail and there was questions about deposits. That's really good to see. That tells you people are using it as a safety net. The other thing here was the BlackRock, this little low pivot, the BlackRock spot ETF caused this latest move. So I think you're starting to slowly see it morph, but it's a morphing that's going to take years, not weeks or months. And investors just have to be patient. Over time, as it becomes more and more accepted as a digital gold, then it will be treated as a digital.
There's been a whole craze around what's going on in AI, and I think a lot of people are wondering, how do they get exposure, and is now the time to do that? It gets even trickier because you have companies that are private, they're doing AI, or maybe a really big company has a small AI component. So I think it's very challenging to figure out what to do with this trend that we're seeing.
Yeah, it really is. And the biggest thing too is, always liken it to past crazes, right? So you go back to the dot-com era, the late 90s. For those of you that are a little older, you may have experienced this, but the hype was much the same. Everyone said, hey, this is going to change the world. And they were right. The internet did change the world. Dot-coms did change the world. But there's this initial excitement, and then there's this kind of overbought scenario that has to unwind. You see the crap companies get flushed out. We kind of saw this in crypto too. In fact, we're still seeing it, where a lot of the altcoins are getting flushed out. The best will survive and thrive, much like a Bitcoin, maybe an Ethereum. But I think with AI, the same thing. So, for instance, an NVIDIA, to me, yes, it's amazing, but it's probably overdone for a while now and has to come back in. We'll see what the earnings obviously say. But, that would be the same thought process here, is that I wouldn't personally, and I speak from my perspective, is I'm not chasing these names to the upside. I'll wait for a flush out. Our emotion says chase because you can make a lot of money. Usually that's the opposite. We should be doing the opposite of that. So I think that's one of these scenarios, just like when Bitcoin was at 65, 69,000, we're like, oh, it's going to go to 100. And then it went straight down. Same thought process, use that same emotional kind of understanding.